Hi, everyone. Thanks so much for joining us. This session is really focused on how we can tell the difference between what's good in the kind of climate solution space and what we're calling what's the BS factor. So very hard for some people who may be new to the space to know how to decipher from an investment point of view, but just in general, what's really working and what's not. So you have some excellent people with us today who can help us kind of navigate a bit through this. Professor Michael Mann, who's got an amazing new book out, The New Climate Wars, is very much focused on some of this. The very kind and wonderful Vanessa, I hope I say this properly, Vanessa Fajans-Turner, who's working with BankFWD, and John Hale at Morningstar. And my name is Blair Palese, and I am climate editor at Climate and Capital Media. So maybe, Vanessa, we could start with you, just a quick take on why you think it's so important right now to help people kind of navigate, given there's a lot of money flowing into climate and climate solutions.
Well, thanks so much for having me. What we see right now is that the world knows what it has to do in terms of slowing the pipeline of finance to fossil fuels. And we know also that major big banks are funneling more and more money into fossil fuels with increase year on year since the signing of the Paris Agreement in 2015. We're going the wrong direction. What I really urge people to think about is that for whatever investment fund, whatever investment advisor they're working with, they ask where the non-impact investment dollars are going with that institution, and they think about how their funds will be used in that institution when they are not being allocated to their impact funds.
Great, thank you so much. Michael, what do you think is maybe the biggest challenge and problem when so much effort and spin is going into kind of creating, in some cases, an image that it's a good thing for the climate, but in fact, it's the same old fossil fuel rhetoric?
Yeah, this is what I call the new climate war in my new book. Climate change denial is no longer tenable. It just nobody buys it because people can feel, they can see the impacts of climate change. But the forces of inaction, I call them the inactivists in the book, are still trying to keep us addicted to fossil fuels because they continue to profit for as long as we remain on fossil fuels. And so they're doing everything they can to distract us by proposing false solutions like geoengineering or carbon capture, and to thwart efforts to decarbonize our economy by discrediting renewable energy, by deflecting attention away from the needed policy solutions to individual behavior, as if it's just a matter of us as individuals. Of course, we need to do everything we can ourselves to minimize our carbon footprint, to minimize our environmental footprint, but we need our policymakers to put in place incentives that will shift the entire economy away from fossil fuels towards climate-friendly renewable energy.
John, from your perspective, there's loads of great opportunities that are coming out. I think more funds, more focus on investment in innovation and new tech. That's great. How do you find people in the actual market of looking at the investment side? How are they working out how best to navigate that and make good choices?
Given how much the climate crisis has worsened over the past decade and the point it's at today, you might think that all mutual funds and ETFs have taken steps to protect their investors from the effects of climate change. After all, they have collectively trillions of dollars at stake, but sadly, that's not the case. Standard index funds and most traditional actively managed funds have not even really taken even the most rudimentary steps to address climate risk in their portfolios. So, luckily for investors in the US, there are now close to 400 open-end and exchange-traded funds out there from which to choose that do focus in some way on climate and other environmental, social, and corporate governance, ESG risks and opportunities. But even within that group, only a small subset are completely fossil fuel free, for example, and a relatively few number really actively focus on investing only in companies that are creating products and services that'll positively impact the transition to a net zero economy. So you really have to look under the hood before selecting, even a fund that says it's focused on climate.
Well, this is just a short taste, and we'll have more time for kind of diving into some of the detail on the session. So hope to see everybody there. And thanks so much, all of you, for your expertise. Look forward to talking more when we can.